Hey Leo, I thought I'd just shoot you this video. I think it might be easier for me to just chat through this, but excellent start. So we have 485,000 committed as of August 25th. 500, to be honest, was my minimum threshold for doing this. I think I was gonna, kind of kill it if it wasn't gonna hit here. But basically, I mean, a year ago we tried to go raise money into, so the way funds work, if you don't know, sorry if this is not new information, but like you have a like top level LLC, and then you have like all the portfolio companies in different LLCs. We actually have some portfolio companies in kind of our main LLC, which they're too small really to like make sense to have them in their own LLC. But anyways, we tried to go and raise money into that like master entity that owns everything that we do, and we had a really hard time getting any kind of valuation on it. So this was in like 2021, where all of these same people I was talking to were also investing in these, like YC companies that just had the craziest valuation on no revenue. But for us, when you're raising money, like if you go and raise $1 million and you're going to invest that in R&D and growth and stuff like that, that is just a very different thing than going and spending $1 million to buy maybe, I don't know, let's say 250,000 to 400,000 of revenue. Right, and then the money's gone. You don't actually have any more money to go and grow the thing, and then you have to go raise another million to go buy another $250,000 to $400,000 of revenue. Right, like that's just kind of the model. And if you map that out over like on a cap table, we would just be diluted to fucking nothing. So raising dilutive capital to go buy companies is just really really difficult, which is why nobody does. I mean, very few people do that. It's mostly like a fund structure. So, I mean, unless, of course, you could do something like, I'm pretty sure Constellation does this. Don't quote me on this, but you raise a big pot of money. It's like permanent equity. And then you take all the cash flow to continue buying more businesses, and you kind of like only raise once and keep trying to do that. Or you go this other route and do this like kind of fund structure. Somewhere in between is what we're doing with the FlipFund. So it's called a fundless sponsor. It's really common in real estate. So in real estate, you go and you say, we're going to go buy this building. And so you as the investor would say, okay, great. I like this deal. I like this building. I get the plan, et cetera. And you would just go and invest, and you would buy that one building. So it's not a fund, right? There's not like multiple buildings you're buying. And same with the FlipFund. It's just we're buying one company. So this is a fundless sponsor. And I think that, for us, we've done 10 on our own. And then this is our first one where we're bringing outside investors. And then we'll do a couple more, I think, eventually, and raise like a proper fund, ideally like a $10 million kind of fully discretionary capital fund where we can go and buy a bunch more businesses at a bigger scale. The reason this model came up, though, is because one of the objections when I was going out to raise previously, nobody wants their capital locked up for 10 plus years. So in venture land, that is the lockup period. You really don't know when all these companies are going to exit. Asking somebody who's 22 doing their first company and they have a rocket ship on their hands when they're going to sell the company is like, that's not a question you ask. That's not something people think about or should be thinking about necessarily. So I came up with this structure. What if we just buy one company between $500,000 to $1 million? We try and double revenue and we sell it in 12 to 24 months. And that 12 to 24 month promise is the main hook, right? Like, so this is a maximum of a 2-year journey. For this first one, I mean, there's all kinds of upside scenarios where we could deviate from this and everybody would be very happy and making a lot of money. But the promise is that this will be a 24-month journey. And even if we're leaving a little money on the table, we're going to sell it and exit, and it'll be a realized gain after 24 months. And that is kind of that is the promise of the Flip Fund. And it's been relatively easy to raise money for, but the only reason that's true is because I've been writing this blog for 3 years, right? And this is the first ask that I've ever made of the community that we've built so far, and so it's gone relatively well. But the main reason we're raising this fund at all is because we've bought 10 businesses, and we could either wait and continue compounding our own cash and be patient and then sell something and then go buy something slightly bigger. But basically, it's just been the three, myself, Danny, Henry, it's just our cash. And we don't have any more cash to allocate to go buy companies. So we're out of money. And if we want to keep doing this, which we do, then we need to go raise outside capital. So that's the primary reason. It's not so much about getting liquidity faster and more often. Because again, flipping companies, that's not always the goal, right? There's stuff at XO that we've held. The very first 2 acquisitions we ever did, we still own. And I don't foresee us selling those. They've been great. Both of them have like 7x and 10x So there's no real reason for us to sell those. But for this flip fund, because of the kind of promise to investors and people's, other people's money, we're going to stick to that 12 to 24 month timeline. In terms of a target, I think what we're starting to congeal on is buying something that is a little bit more sales led. So with our current portfolio, we've been focusing on product led growth, but for this one, we're going to be focusing on, I think, more of a sales-led growth. And again, we are subject to whatever is available in the market over the next 2 to 3 months. And if we don't see something we like, I'm fully expecting that we will give all the money back. If we can't find a good deal, I'm not just going to go buy something to buy something. That would be a really disappointing outcome, but it's something I expected as a possibility, when I started this thing. That being said, so if we do see something that's a little bit more sales led, so the term is like vertical enterprise SaaS, which means a lot of things to a lot of people. But for us, it would mean something like back office software for like a dog daycare center, or a regular back office software for a regular daycare center. Some kind of software for the construction industry, or a very specific vertical within the construction industry, like roofing, like back office software for roofers. So these are kind of like the boring SaaS companies that you hear people talking about in this space. The cool thing about product-led growth is you don't really need salespeople. Now, I'm kind of on like an anti-product-led growth kick. It feels a bit like a myth, because you still, if you have this crazy good top of funnel and that's where all your attention's going, and then you do nothing between getting them in the front door on a blog or getting permission to contact them, and you're just hoping that they sign up, generally that conversion rate sucks. So there's still a shit ton of work to do after you get somebody in your top of funnel to get them to actually convert. And so product-led growth, other than not having salespeople that are like on the phones all day, maybe cold calling people or cold emailing people, there's still a ton of follow-up, and like, somebody from Google signs up and you got to email them right then and say like, how can we help, or what can we do? Do you want to hop on a call? All that kind of, best practicey stuff still needs to happen with product-led growth. And I think that part of it gets lost in the conversation because people think like, oh, product-led growth, the product sells itself. It's like, yeah, but it's also nice to handhold people, high intent people through that process. So for this one, going back to what I think that we are also looking at buying is not product-led growth, but something where, let's say in that like roofing construction back office software, I could literally go and get a list of every roofer in Los Angeles, and I could go, in theory, go get a yes or a no from every single one of those people. And for us in this short time frame to try and double something in 12 to 24 months, that feels like a little bit higher degree of control that we would have over product-led growth, which frankly a lot of times is you run a lot of experiments, just like most companies fail, most product-led growth experiments fail. And but if we can go and just execute on like a list of leads and go out and hustle and get a yes no from like literally every customer we can put on a spreadsheet, that will give us the ability, I think, to better control actually doubling revenue in 12 to 24 months. We didn't quite execute in that way with one of our previous companies called WorkClout, but Danny did an amazing job. We bought it, for like relatively cheap as a multiple of revenue. We doubled the business and we sold it in 12 months or 13 months. And so that's what we hope to emulate here with the FlipFund.
Yeah.